Hello friends, a very warm welcome to my channel. In today's video, we have taken up the analysis of another very interesting company called Borosil Limited. This company is into glassware and scientific equipments. This is a special situation wherein two major businesses of this company are going to be demerged and value unlocking is going to happen. So in a way, through this analysis, we will also understand how special situation investing works in different companies. Before we begin, if you are new to the channel, please do subscribe and hit the bell icon. And if you are not a part of our Telegram channel, do join today as we discuss daily the market analysis and lot of new investing related concepts you'll get to know in our Telegram channel. So let's begin the analysis of Borosil Limited. Borosil Limited is one of the market leaders in India in the glassware category. The company manufactures products for the consumer segment as well as the B2B segment, which is related to the laboratories. Borosil is a more than 50-year-old brand, so it's a very popular, strong brand in India, and they have more than 65% market share in the laboratory glassware categories, that is the glass equipments which are used in the laboratories and pharma companies. The estimated market share in the microwave segments is about 60%, so in this also it's one of the market leaders in India. Broadly, the company has two business segments. The first one is the scientific products or the industrial products, and the second one is the consumer products. In the opalware segment, which is a substitute for glass and plastic utensils, company is the second largest in India in the organized category. Let's understand a brief history of the company to know the journey a little better. They started their business in 1962, so it's a long legacy. It was born as a public limited company by acquiring another company which was called Industrial and Engineering Apparatus Private Limited. And they did a technical collaboration with another company called Corning Glass Works, which was a US based company in 1963. In 1970, they introduced their first iconic vision glass, which was the first consumer glass product, which was very well accepted in the market. And in 1991, the company's subsidiary, which was the Gujarat Borosil Limited, it started manufacturing the architectural glass. In 1999, they expanded their products in the range of consumer glassware, so it became more of a consumer facing brand. And in 2008, another subsidiary called Valuations Glass Works, they set up a manufacturing facility for manufacturing laboratory ware and consumer glassware equipments. In 2015, they ventured into another line of business, which is the laboratory instruments. So this is not glassware, this is instruments through a brand called LabQuest. And in 2016, the company acquired two companies, which is Hopewell Tableware Private Limited and Classpack Private Limited, to expand their business into the pharmaceutical market. In 2018, all these companies were merged into their parent company, which was Borosil Limited. And in 2020, they demerged their businesses, which was one business was into the solar glass manufacturing into Borosil Renewables and the other business into Borosil Limited. Now going further, two businesses in Borosil Limited are also going to be demerged. Let's get to know the management of the company better. Mr. Shrivar Kheruka is the Vice Chairman and Managing Director of the company. He has done his BSc Economics from the Wharton School of Business and he has done his Bachelor of Arts from University of Pennsylvania. He has more than 16 years of experience in the manufacturing in the glass industry, and in his legacy, he is the fourth generation entrepreneur in this business. He has been awarded the 40 under 40 top business leader by the Economic Times of India. So by this profile, you can understand the business is in very dynamic hands. Now let's understand the business a little better. Broadly, the business is divided into two segments or two business lines. The first one is the scientific products and the consumer products. In scientific products, there are three sub-segments. The first one is the laboratory glassware. This caters to the glassware which are used in the laboratories and pharma companies. The second one is the pharma packaging. In this they manufacture materials which are used in the packaging of pharma companies like the glass bottles, etc. The third one is the lab instrumentation, which is related to the lab instruments. In their consumer facing business, again there are four broad sub-segments. The first one is the core microwavable products which are used in the microwaves. The second one is the Lara opalware. So there is another brand which the company has launched other than Borosil, which is Lara. The storage products which are like jars, containers, etc., or tiffin boxes. And the fourth segment is the domestic appliances, where the other things like the cookers or mixer grinders, these kind of products are developed by the company because they want to leverage their Borosil brand. So these are the products which they manufacture in the consumer division. This is a very interesting way of presenting, wherein from morning to evening these are the products used by a normal person which are manufactured by Borosil. So in the morning they start using the cookware and the storage containers, and later they carry their tiffins in the lunch boxes. They also can carry water bottles which Borosil manufactures. Then for serving they have serving instruments, then for dinner they have the crockery and also appliances for making things in the kitchen. So there is great transition going on in the company internally in terms of their business. In terms of, if we talk about specifically the consumer products division, it is getting transformed from a glassware single product company to multiple brands consumer company, because they are venturing into different lines of products within the consumer brands itself. From occasional use like a microwave bowl, they are entering into daily use products like the servingware and the appliances which are used in the kitchen. Then from a single brand which is Borosil, the company is moving to multi-brand company like Lara as the brand which is newly added. And from a general trade business, it is moving to modern trade and also e-commerce, which is being focused extensively by the company. So in glassware, these are the products which are manufactured by the company, which are the consumer facing products. In appliances, which they have ventured into recently, they are manufacturing microwave, mixer grinders, then ovens and all these stuff. In their brand, which is for opalware, that is Lara, these are the crockeries they are manufacturing. Then their stainless steel products which are used in our daily life under the Borosil brand. Now coming to the second segment, which is the laboratory ware or the scientific products equipment. In this, the company has brands like ClassPack for the glass products and LabQuest for the instruments. So in this, what is happening, from a single brand to again multiple brands like LabQuest and ClassPack are getting developed. From earlier only the glassware category, now they are diversifying into lab glassware, lab instruments and also pharma packaging business. From domestic, the company is looking at international exports also in this business. So again, within the scientific business division in the company, there is transition happening. So overall, the company is transitioning, and within the company, the divisions are also transitioning into different lines of businesses. So these are some of the products manufactured by the company in the laboratory glassware segment, where mainly the customers of the company are the pharma companies, government labs, food and soil testing companies. Under the LabQuest brand, where the company is manufacturing instruments, these are the different instruments which the company makes, like the block digester, multi-tube wokster. Under their scientific equipments brand, which is ClassPack, which is for pharma packaging, these are the products which the company manufactures, like the vials and the ampules. So under their consumer products category, the company supplies to brands like LG, Whirlpool, Samsung, Panasonic and a lot of big brands you can see on the screen. In their retail partners, they have supplies to modern trade chains like Chroma, Walmart, Hometown, DMart. Then in their scientific products division, they manufacture and supply products to the big pharma companies in India like Cipla, Mylan, Lupin. Now when we talk about the segment wise breakup of the business or revenue of the company, almost 1/3 of the revenue comes from the scientific division presently and 2/3 comes from the consumer facing products. Within the consumer products division, if you see, the glassware constitutes about 25%, the non-glassware about 36% and the opalware constitutes about 38% of the business. And within the scientific products division, pharma packaging constitutes about 1/3 of the business, and around 2/3 of the business is by laboratory glassware. Lab instruments is still in the initial stages, which constitutes about 8% of the business in the scientific division. So now you have got a broad understanding of what the company is doing and how the business is getting transitioned into new lines of products. Now let's talk about the industry in which this company operates. Where first we'll talk about the consumer products. In consumer products, the first one is the glass microwavables. This is a market size of about 230 crores and growing at about 10%. Tumblers is growing at about 10% as a market size of about 520 crores. Storage products, the market size is about 700 crores and growing at about 15 to 20%, the industry itself. And the insulated bottle range is about 1100 crores and it's growing about 10%. So almost all the products in the consumer facing division, they are growing in double digits. The industry itself is growing in double digits and the size of the industry is also quite decent. So there is still a lot of headroom for the company to grow in this industry, and the industry will go along with the company and the market size will keep on growing. In the scientific products, if you see, the first one, which is a lab glassware in India, has about 250 crore market size and grows about 8 to 10%. Lab glassware is about 4,000 crores and grows about 2 to 3%. So in this segments, which is the scientific products also, again, the market size is huge and the growth is also consistent. What are the broad trends in this industry? In the opalware industry, earlier people used to use melamine because it is very cheap and it is unbreakable, but now people are preferring more of opalware because it is more aesthetic and sophisticated in looks. Most of the products in the kitchen which we use earlier were either plastic or steel, but now people are preferring glass over the use of these instruments. In India, most of the lab instruments earlier were imported. So now when these kind of companies manufacture lab instruments, there will be import substitution and make in India opportunities for them. For storage, many a times we use plastic containers, and because of health reasons now people will shift to glass for storage items also. So these kind of trends you can observe in this industry, which will generate tailwinds for companies like Borosil Limited. Now, who are the competitors of the company? There are different competitors in different segments. In lab equipments in the listed space, you have competitors like Tarsen and La Opala in the opalware, dinnerware segment. In domestic appliances, again, it is highly competitive. The company competes with companies like Prestige, Stuffcraft. So although the company has a very good brand, a very good market share, still all these segments are highly competitive segments of business. Now, in spite of having so much competition, then what is the competitive edge and why should you invest in the company? The company has market leading positions in a lot of product categories, almost 60 to 65% in glassware, as we have discussed. The company has strong entry barriers in the pharma industry, as for a newcomer, the customers will not approve their products so soon. So it takes a lot of time to become a supplier to a pharma company. The company already is into this business, so it always has a first mover advantage compared to newcomers. They already have the required infrastructure and R&D teams to keep developing the products better. The people into this business, managing the business, are almost the fourth generation, so they have strong roots and experience in this company. Borosil as such has a very strong brand presence in B2B, as well as the consumers know Borosil a lot. So all these things will generate competitive edge or economic moat for the company to be better and perform better than the other companies. Now, what is the growth outlook which the company is giving for the next few years? They are setting up the first borosilicate pressware capacity of about 25 tons per day at Jaipur. The company is spending a lot of money in developing Borosil as a consumer facing brand, spending almost 6.5% of revenue for advertising and marketing. The Class Pack brand, where they manufacture the vials and ampoules, if they operate it at a full capacity, they will generate about 200 crores revenue, and they can further double it to 400 crores in the near term, and they will also start international expansion and focus on exports going further. These are some of the capex plans of the company. In opalware, they have 42 TPD capacity. They have expanded to 84, spending a project cost about 175 crores, which is already completed. So this has created headroom for the sales to grow. In the vials and ampoules, they have 300 million and 500 million present capacities, which are growing to 500 to 700, spending 75 crores, and this will get completed by FY24. In the borosilicate pressware, they are creating a capacity of 25 tons per day, and for this they are spending about 75 crores, and this will start functioning from the beginning of FY24. So like this, for most of their main products, there are capacity expansions also going on. These are some more growth initiatives which the company is taking. They have entered into the filter paper product category. They are exploring new opportunities in the syringes, cartridges sector. They are moving their technology subsidiary to a new facility, which is from 6,600 SFT to 30,000 SFT. They have started their own manufacturing for some products in the LabQuest category, which earlier they were outsourcing for and working as an asset light model in the lab instruments. So in the consumer product segment, the company is targeting a growth of average more than 20% CAGR in terms of revenue going forward, and they want to focus and make this brand as a go-to brand for the customers. So the company will also focus on improving their operating efficiencies, which will in turn improve the EBITDA margins going forward. In their scientific products division, the company is targeting growth of more than 15% CAGR going forward. They want to improve their cash flows and manage their working capital better, and they will also work on the EBITDA margins by entering some higher margin products to improve the EBITDA. Now let's talk about the special situation which is developing in the company. This is the present holding structure of the company. The promoters hold about 70% and public 30% in the company, and there are two subsidiaries, which is KPL and BTL. Now, after the demerger, this will be the structure. The promoters and public who will hold about 70-30 in the new company, which is Borosil Limited, which will remain as a consumer products company. There will be a new company formed by a way of demerger, and the promoters will hold about 68%, public will hold about 32% in that company, and the new company will be called Borosil Scientific Limited, and this company will hold the scientific products division of the company. So why does the company want to do this? Because even now they are working as independent business units and everything is streamlined, and by doing so their focus on individual businesses will be better. They will raise individual capital for these different businesses, and they will scale up both the businesses drastically going forward, leading to value unlocking. Now, what are the risks in the business? The volatile raw material prices will lead to the margins being fluctuating in this industry, especially the gas prices also will impact the margins of the company. These segments, although the company has a large market share, still it is very highly competitive, both from the organized as well as the unorganized players, as a lot of people don't care much about the brand while buying these products. They just buy it what is displayed on the window of the store. The customer preferences, if they change from one product to another, then the company's business may have a downturn. The government may take different decisions in terms of policies for domestic policies or import policies which may impact the business of the company, and there are different initiatives or strategies which the company is implementing. So the risk of execution is always there, and the company has to ensure success in the new initiatives, otherwise the present business might be impacted by the company. So by this we complete the business analysis of the company, and I'm sure you have understood in detail about the business of the company, and now we move to the financial analysis. The last 4 years post demerger, if you see, the revenue has gone up from 360 crores to about 828 crores. So the growth has been very good. In terms of EBITDA, the EBITDA has gone up from about 50 crores to about 150 crores, which is again a substantial growth. In terms of EBITDA margin, it's somewhere around 16 to 18% presently, but the company aims to improve this going forward above 20%. The profit after tax has improved from about 25 crores to 85 crores in the last 4 years. The profit after tax margins are also slowly improving, and they have gone up above 10%. The share capital is the same at 11 crores. The reserves are steadily growing. It's almost a debt-free company. So again, this is another positive for an investor like us. The trade payables are under control. They are in line with the business of the company. The fixed assets are more or less the same, and going further, they will further increase as the company has taken up a lot of capex plans. The inventory is around 190 crores on the balance sheet, and the inventory days are improving, in the sense they are reducing as the company is managing their inventory better. But still the inventory days are on the higher side, as they are around 220 days. We generally expect this to be around 2 to 3 months, where the working capital is very efficient. In terms of trade receivables, the trade receivables are well in control, and the debtor days are somewhere around 30, which have gone down from 90. So in terms of collection efficiency, the working capital is managed better. The company has a cash of about 30 crore on the balance sheet, and the operating cash flows have always been positive for the company. In terms of free cash flows also, the company is generating good free cash flows, except in a few years where they have done huge amount of capex. So the liquidity position and the cash flows position of the company is really good. In terms of ROCE, again we see an improvement. As we see improvements in the margins, it has gone up to 18%, and going further it may even be more than 20%. Now let's look at the shareholding pattern. The public holds about 28% in the company, FII is just 1.8%, DII is a negligible holding, and promoters more than 70%. So still the institutional investors are not holding much in the company, and for retail investors I see this as an opportunity. Now let's talk about the valuations of the company, which is another critical part of our analysis. The market cap is somewhere around 4,200 crores, face value 1 share, and the revenue is about 1,000 crores in the trailing 12 months. So EBITDA is about 15%, and market cap to sales is almost 4.4x. In terms of price to earning, it's trading at a earnings multiple of 41 and price to book ratio of about 5 times. So there cannot be a like-to-like comparison for the company, as the company is into multiple businesses. But for an example, if we compare with Tarson's, it's trading at a 40 times multiple and 12x in terms of market cap to sales. La Opala is also trading at around 38x earnings and 10x market cap to sales. Prestige is trading at a 36 earnings multiple and 3.7x market cap to sales. So more or less for me, the valuations look fully priced. But as the company has high trajectory for growth, the stock may get attractive if it falls from the current levels. If we look at the chart also, the stock is into a consolidation. It made a low of somewhere around 250 recently in the market correction, and bounced from there to 450, and now it is taking support of somewhere around 350 rupees. For investors who are fully satisfied with the business of the company and appreciate the growth of the company going forward, Around 300 would be a good comfort zone to start accumulating the stock in a staggered manner. The auditors of the company are Chaturvedi Shah LLP. The ROE is about 12% presently, which we can expect to improve going forward. The company is not paying any dividends presently. The remuneration of Shrivar Keruka is somewhere around 6.4 crores, which increased drastically in the last 1 year. But there are no suspicious related party transactions in the company. So this is about Borosil Limited, a comprehensive and unbiased analysis before you. To summarize, the company has strong fundamentals. The management is very credible. They have a very long legacy. Borosil is a very strong brand for the customers. The size of opportunities in the businesses which the company is operating is huge, and demerger may unlock value for investors in this company. In terms of antithesis points, there will be stiff competition in all these segments from organized as well as unorganized players. The valuations are more or less fully priced at the present range, so you should look for a better dip in accumulating this stock. And there is always an execution risk in the new initiatives taken by the company, which has to be closely monitored if you are an investor in the company. So this is about Borosil Limited. I hope you like the in detailed unbiased analysis. If you like it, hit the like button and subscribe to the channel. To support us, please do share this video with your friends, and if you want me to make videos on your favorite companies, do mention the names in the comments below. I will surely consider them for my upcoming videos. Thank you for watching and have a wonderful day.